Most people will never reach financial freedom walking slowly. Your habits are quietly derailing wealth growth every single year. Welcome to Money Clarity Hub. Let me ask you a question. Do you think retirement happens after decades of work and constant financial pressure? If your answer is yes, it is this belief that quietly pushes financial freedom away from you. Financial freedom is not about working longer, it is about directing money with intention from the beginning. Most people focus on increasing income first, but income alone does not create freedom without control. You can earn more and still feel stuck in the same cycle, because spending expands just as quickly as income rises. This is where the real issue starts forming. You are moving forward, but not getting closer to independence. Financial freedom is not one big breakthrough moment. It is built through repeated small decisions that compound over time. The roadmap begins with awareness. You need to see exactly where your money is going every month. When you track your spending clearly, patterns emerge without effort. Those patterns show what is slowing your progress. Now, something becomes clear as you look at those patterns. You are not short of money, you are losing it in unnoticed habits. Once that becomes obvious, the next move starts to feel natural. You begin removing expenses that repeat without real value. Build your long-term financial freedom with Smart Money Decision Filter. Link is in the description. This is not about extreme restriction or cutting everything. It is about removing what adds no meaningful return to your life. When those leaks are removed, you create immediate control over your finances, and control is the foundation of freedom. Now your focus starts shifting in a noticeable way. You are no longer just spending, you are allocating with intention. Allocation determines your future trajectory because every dollar is either building freedom or delaying it. At this stage, saving becomes structured rather than occasional, and structured saving builds momentum quickly. But saving alone will not get you there fast enough. Money must grow beyond your direct effort. This is where investing changes everything. It transforms your money from static to productive. Instead of trading time for money repeatedly, you begin putting money to work consistently. That shift reduces dependence on active income. Now something deeper starts becoming visible. Growth is what compresses your timeline toward freedom. When your money compounds, it begins accelerating without requiring additional effort from you. That acceleration is often underestimated. This is where the roadmap becomes practical and actionable. You begin directing a fixed portion of income into investments every month. You do this consistently, regardless of market noise or short-term distractions. Consistency matters more than timing in this phase. Over time, those contributions begin stacking into meaningful amounts, and those amounts start producing their own returns. Now you begin seeing progress differently than before. Your money is working even when you are not. This is where financial stress begins to reduce naturally, because your future is no longer dependent only on your effort. But there is a hidden barrier at this stage. Most people slow down too early. They see initial growth and start reducing contributions. That weakens the compounding effect significantly. Now that you understand how growth builds, the next shift becomes obvious. You maintain consistency even when progress feels slow or invisible. This is where discipline becomes more important than motivation, because motivation fades, but structure continues working. You keep investing regularly and allow time to do its work. That steady approach builds real momentum. At this point, your thinking starts changing in a noticeable way. You stop focusing on short-term gains and start thinking in longer time frames. That perspective reduces emotional decisions and keeps you aligned with your long-term direction. Now the roadmap expands further into optimization. You begin increasing how much you save and invest gradually. A higher savings rate directly shortens your timeline because more input accelerates growth. Even small percentage increases have a large long-term impact. That impact compounds faster than expected. This is where income growth becomes strategic rather than reactive. You use increases in income to strengthen your plan. Instead of upgrading your lifestyle immediately, you direct that extra income toward investments. That prevents lifestyle inflation from slowing you down. Now your system becomes stronger over time because it grows alongside your earning capacity. You are no longer relying only on discipline. You are building a structure that supports your goal automatically. This is where financial freedom starts feeling realistic because your actions align with a clear and measurable outcome. But there is another factor that cannot be ignored, and that is risk. Protecting your progress is just as important as growing it, because setbacks can undo months or years of effort. This includes avoiding unnecessary debt and high-risk financial decisions. Stability supports long-term growth. Now you begin balancing growth with protection more effectively, and that balance keeps your progress consistent. As your investments grow larger, something subtle begins to change. You start seeing income generated from your assets. This is the turning point most people aim for, when money begins producing money consistently. That income reduces your dependence on active work and creates flexibility in how you live and work. Now you are approaching financial independence because your expenses can be supported without constant effort. But there is still one final shift required, and it happens internally. You stop measuring success by how much you earn and start measuring it by how much freedom you have. Now, your decisions reflect long-term thinking consistently, instead of short-term satisfaction or impulse. You choose investments over temporary rewards because the outcome matters more than the moment. This is where the roadmap becomes complete in structure, but it continues through consistent execution. You maintain contributions, protect your progress, and allow compounding to keep building. That combination drives long-term results. Over time, the gap between your income and expenses widens significantly, and that gap becomes your freedom. But herein lies the uncomfortable truth most people avoid. They do not fail because the roadmap is complex. They fail because they keep reacting to short-term emotions instead of following a clear direction. And that automatic reaction is exactly what keeps them working longer than necessary. Thanks for watching Money Clarity Hub. Subscribe for more weekly insights and explore the video playlists.